Ladies and gentlemen, welcome to the Midday Market Monitor. Now, the market is in quite the spin right now. We ended up seeing it drop down to $662 on the SPY today. Things were looking quite rough, ended up almost breaking back above green here at 672. And now we're seeing a little bit of a sell-off happening again. Individual names, however, like Nvidia, green on the day, also starting to turn red, but up 1.2%, back around $180 per share. We ended up seeing them sell off due to that recent rumor on Bloomberg that the AI diffusion rule might be coming back, and that Trump would be looking to impose some sort of overarching ruling on how much compute each company in each country could end up seeing. And then the White House came out and said this is absolutely false, purely just a rumor, yet the company did not recover from that news. So it took it down, but it did not help it ride back up. In other news, let's check out some other names here. SoFi down 3%, back down to $18.31. They did not get entered into the S&P 500. We ended up seeing that go to Vertiv, Light, Coherent, EcoStar, these sort of names. 4 separate companies that got entered into the S&P 500. SoFi was not one of them. Now, some people got extremely mad, said that they were selling off the name. It was like a 25% chance of something that they were going to get in. I would not base your entire investment strategy off of a 25% chance of something happening. I never called for Q1 for SoFi to get in, mainly that they get in 2026, which means we have special events to get back in, and then 3 more times where they could enter in SoFi from June, September, and December to also be entered in, which during those periods, hopefully, SoFi will be a better company, larger market cap, making more revenue and potentially earnings. Could be a problem that ends up coming up if potentially credit deteriorates or something like this that ends up throwing a curveball into those plans, but that is where I'm sitting right now. That being said, we also ended up seeing website traffic come in. So large financial institutions that I cover ended up showing website traffic through SimilarWeb, and I want to take a look at that right now. We have to keep in mind February is a shorter month, 28 days versus January of 31 days, so 3 days difference, roughly equating to about nearly 10% almost, right? That being said, we do have a breakdown here for daily traffic, okay? So what we can see is that daily traffic on these companies did quite well. Well, every single company saw a decrease in the total amount from January to February. The real metrics that we should be taking, well, except for one, Cash App was the exception. The real metrics that we should be looking at is year-over-year statistics and then daily traffic. Those are the 2 to pay attention to, because then you're equaling 28 days to 28 days, and we're also equaling the averages of each day per month. Whenever you go to actually visualize this, this is what this can look like. Let me also bring that down, get a better view here. SoFi, although we saw a tick down, look at this average daily traffic, 0.92 and 0.9. We've never even seen 0.8 before. So this is a large step up from where we've seen before, absolutely leapfrogged from December of 2025, which was the highest previous daily traffic, and then sort of jumped up in this new 0.9 space. Hopefully we end up keeping that for SoFi in March as well. That would be a very, very strong quarter. Robinhood ended up seeing a sort of, all right. It had better than expected daily traffic, but on a year-over-year result, it doesn't look any stronger. They're mainly just looking at, okay, how strong is crypto? And you'll sort of end up seeing how strong Robinhood will be. So this is actually holding up pretty well versus what crypto is doing. To put that into perspective, let's take a look at a company that is purely crypto, like Coinbase, and you can see the difference in the volumes from a strong crypto period to right now. Okay, much, much lower than obviously still a strong January because of 2025 because crypto was strong, but holding up way better versus the Coinbases. Look at the daily traffic on Upstart as well. These are some of them that I did not highlight in my tweet, but we ended up seeing some pretty great results. I think Cash App stole the show, though. Massive increase. I've said this a few times, but I just want to say it again. Cash App was the name, or website traffic was the way that I ended up selling Cash App. So if we go all the way back and we take a look at Cash App before, I was a shareholder during this moment, okay, while it was increasing. The second that this started to take drastic changes in overall website traffic, I started to sell, and then we started to see huge underperformance in the company. So it's been a good indicator for their success. But now we're starting to see a reverse where the traffic is starting to climb back up. And not only that, the daily traffic is back where we just saw like those previous highs, like where Cash App was sort of like peak almost. So keep an eye on Cash App. I know this is one that everyone has sort of given up on. I myself, I'm not a shareholder on it right now. But if that continues to grow, like if we see strong March statistics, could end up showing a pretty interesting Q1 result. I might end up playing those earnings because it's worked out for me in the past. PayPal, this one's probably the most devastating, honestly. PayPal is a direct result of how many people are actually checking out with PayPal. Okay, so if you think about that in just the way that, like how PayPal works, if you're on a website, it takes you to paypal.com in order to facilitate that payment, then sends you back to the website. PayPal's traffic obviously is huge, 422 million, but that part doesn't matter. What people are investing in is what's the rate of change and how much is that surprising versus what we've seen previously. It's a little lackluster this month, whereas Venmo traffic doing very well, consistently hitting new highs. You can see that on daily traffic. Okay, so even though it went down month over month, it's actually stronger on a per day basis, meaning it was stronger than January, but it's not going to show up in the actual bars. All right. Good to have you back. Good to be back, brother. I honestly, I was feeling like not congested at all, but I think talking is actually like making me a little bit more stuffed up. I don't know if there's any science behind that. I feel 1,000 times better than I did on Friday, but after already streaming for about an hour this morning, I'm pretty stuffed. Okay, we also ended up seeing SoFi down 3.5% right now. BM&R stock is up 6%, back above $20 a share. We also ended up seeing their announce in total holdings. Total holdings back above 10 billion. Honestly, it doesn't matter. It's just that's like whatever Ethereum's doing, that's what's going to happen to BM&R. However, the strategy of what they're doing is really important. They ended up adding roughly about, I think it was 60,000 new ETH. Maybe we can see where they wrote this down. Where was it? Acquired 61,000 compared to an average of 45 to 50,000. That's so funny. Recently needs to be in bold because they used to acquire, 100, 200,000 per week. But yes, 60,000, 61,000 is higher than their weekly averages recently. However, the cash is crazy. Let's take a look at this cash that they're ending up holding. Total cash of 1.2 billion. This is by far a company high. Okay. The last high that they had was 1 billion. And then the part that we were at before this was about like 800 million. Huge step up in cash, which I find very interesting that they increased their cash position, but didn't increase their ETH holdings position. Like, are you expecting better dip purchases? Why the total cash increase so much here? Especially considering that your total holdings is not increasing because the ETH isn't really increasing all that much. That means that as a percentage of your total holdings, cash is now, over 10%. It is quite interesting to sort of follow. So maybe they suspect another sell off, essentially. Okay. Look at this too. Talk about a company that's hard to follow. Holy. Hims and Hers. Hims and Hers ended up showing off a new partnership with Novo Nordisk after kind of falling out. But maybe they can become friends again. This has been the hardest company to potentially follow, and I know a lot of people who have ended up selling this company, which essentially was at this bottom here, only to spike back up. We'll see if they can maintain it, but up 39% on the day, pretty freaking high. Especially they were trading at $23.51 today. That is just incredible. Just incredible. Other things that are moving: Bloom Energy, Vertiv Holdings. So they just got entered into the S&P 500, up 9.7%. Probably will end up going back above 10. Air Test Systems working. Better Homes up 9.2%. Robinhood's RVI. This is their private company, holding up roughly 7.9%. SanDisk, some of the memory names doing well. Kratos and drone tech, stuff like this doing well. BM&R is doing well. Nebius. I was talking about Nebius on the first live stream. Nebius is doing well today, but the consolidation of this company over the last little bit, essentially from September 8th till now, being in this $90 range, is quite fascinating. Now, obviously, they've ran up from 18 to here, but we have to look at it not based on how much it's run up, but by the actual price of the company. The price of the company is $24 billion. They're currently guiding for, still continuously, roughly $8 billion of annual recurring revenue by the end of 2026, meaning that without growth, 2027's full year will be above $8 billion. With growth, which would probably even just conservatively come in at somewhere around 20-25%, would put us somewhere at ending 2027 about $10 billion of total sales, total revenue. Okay. They're not selling tokens at a loss. They're selling tokens for a premium, and there is depreciation and everything like this. But then the interesting part that I find about some of these cloud names, and why I think that this is going to be an absolute steal long-term, is that the pricing, and we've seen this countless times, but the pricing for chips over time is just continuously increasing. So if you were to look at like a rental cost on an H100, which is many chip variations older than where we are today. So Vera Rubin it is supposed to come out second half of 2026. So that's right around the corner. Then we have the GB300s or the Blackwell Ultras, then the Blackwells or a GB200. Then we start looking at Hopper, right? And then we have the Hopper Ultra and then the Hoppers. The original H100s, okay, the standards, which was an unbelievable breakthrough in technology, unbelievable chip, but still, they are not as good as the Blackwells and will not be as good as the Vera Rubins either, had seen quite the decrease in overall rental costs because, well, new chips were coming up online and there was a lot more just chips coming up online. And so the older variations were lowering in cost the same way that an older iPhone that would be selling would come in at lower cost, because the resale value, the chance that you could get a new, better version at lower cost, supply, demand, right? All of these things would bring the cost down. But supply, although being relatively unchanged, well, that's staying consistent. This price increase is being driven purely by demand. Okay, for older chips, while new chips are getting set up and coming online, H100s are still rising in price. Essentially 20% from the bottom, if not a little bit higher. there was a famous Toby Lucky tweet that ended up coming out from December that essentially said that if you've used artificial intelligence tools from a month ago, you have no idea what you're using today. Like they're completely different. And what he was referring to was the advancements that Claude had made from Claude Code. Okay, ChatGPT Codex, these sort of coding agent breakthroughs. And so what you end up stacking on top of all these new tools are Claude Marketplace and Skills and OpenClaw and everything like this. That's just raising the total usages of those chips. And if they become more useful, then they become used more. Right? I know that seems complicated, but it's true. So AI is becoming more useful. And so they're being used more, and that's in the face of rising costs. So older cloud companies, not even older, you look to an AWS, a cloud compute, or a Google Cloud Platform, a Microsoft Azure, and then you start looking at the CoreWeaves, the Nebiuses. Some of these are going to be a little bit different because they're not dealing with as many smaller customers, dealing with hourly rentals or something like this. Names like CoreWeave that are selling their bare metal are doing, they're trying to look for 5+ year deals. They're not going to be super impacted by this change of cost, but overall, these rising prices are good for cloud companies. That's where I'm positioning my portfolio. Why is Nubank's website traffic down? Great question. The answer to it, I don't know. But it does bring up a good point. Does it show a decline in Nubank's business? The answer is that as long as I've been following Nubank, the spikes in website traffic have not translated into unforeseen beats in their earnings, and the decreases in their website traffic have not led to decreases in their earnings. So the truth is I just don't know if that company correlates well with website traffic. The companies that I have found track very well are names like Robinhood, just because overall traffic leads to more and more sales. SoFi, surprisingly, just that's how I've been able to guess how many new customers have been coming on the platform at a pretty decently consistent rate. And the times that I've relied more on even like app downloads has been less accurate than website traffic. And then by far the most efficient one has been Cash App. But the one that has not been super successful at tracking it has been Nubank. So while it is a concerning sign that it is falling off pretty quickly, the actual company's earnings have looked like for real never better. Like I love that company so much. They're in a very, very short list of companies that I would purchase at these prices like today, Do you think Robinhood's RVI will be successful? It's down at the gate. I think, I don't know if it's going to be successful. It's going to be successful based on if those companies are successful. I just don't think I want to buy a basket of individual private companies. I think SoFi's strategy with Cosmos funds are way better, where, let's see if I can bring this up. SoFi essentially is partnering with companies individually, okay, through Cosmos funds. Like they're doing a partnership for this, but essentially they're just saying, hey, if you want to invest in OpenAI, if you want to invest in these companies, we will make a basket of shares in those individual companies. Now, there is some problems. You need to be an accredited investor. This is not for the everyday person. It's not an IPO. They can't get you an unlimited amount of shares or anything like this. But this way, I can just invest in Colossal Biosciences, OpenAI, Perplexity. I'm not like wanting to buy Stripe and then, I have to hold Boom Supersonic and a bunch of these other companies, which I'm not anti those, but like, let's say I know nothing about them. That for me, for my portfolio is risk. Okay. And it's diluting my upside because I'm buying for like Stripe or for, Databricks or whatever. Okay. Shouldn't Hood be getting a bid today with crypto being up? Let's see. Hood, yeah, Hood's not seeing a bid today, but yeah, I think that is a little surprising. The fact that they're not even green. Ethereum's up 4%. Uh, Bitcoin's up 4%. I think if you end up doing the math on it, it's not that Hood should be down, but maybe that's because, general markets are down. I think in the last quarter, you sort of saw Hood showing about 18% revenue for crypto. Now that changes drastically. Like if Ethereum goes up to $4,000, I promise you it's not going to be 18%. It'll climb extremely quickly. Uh, but yeah, okay. Um, Someone said Reddit. What's happening with Reddit? I have not checked the stock. Down 2.6%. I would love so there's like a short list of CEOs and stuff like this that I would love to talk with. And obviously we focused on the fintech space and I got to break out of that somehow. But Reddit would be up there on the companies that I would love to speak with. CEOs or potentially some other form of uh, company. Sorry, wait one sec. I'm seeing some update here. Uh-oh. What is happening with Notion? Is Notion doing some update? This almost makes me think that they're trying to like go after Microsoft Excel or something. If Notion came out with their own version of Excel, I would use it. Notion might be the number one company that I love the most that I've paid the least to. No, that can't be true. I pay for them, but just not. It's not a lot for how much I love them. Um, but yeah, I would love to talk with Reddit's CEO. I need to reach out. Okay. Hood tanks when crypto's down and then doesn't catch a bid when it's up. Yeah, I mean, it's not up enough. like crypto's not up that much. Ethereum's at $2,000. It's not like we're seeing a massive surge in crypto pricing. It was like 2,100, 2 days ago or something, 3 days ago. Uh, what about Galileo? Well, it's just from the same company. And honestly, it's much easier to interview the CEOs than any other part of the company, which is so funny because I think a lot of the people who are hired at the business is worried about what they can say and what they can't say. The CEOs decide what they can say and what they can't say. Um, so a lot more open questions from CEOs than what you would see even from, the head of Galileo that might be worried about what he can say about contracts and getting backlash from Nodo or something like this. Speaking of SoFi, actually, if we can speak about SoFi, we ended up seeing this. I don't know if I'm not an American. I didn't get an invite, so there's a lot of commentary about how this person's not allowed to share this information, but that's their own free will, so they can do this. Got access to the beta of Coach running in the SoFi app right now. And so let's just open this real quick and have a look. Not that it's going to show too much. But essentially in the SoFi app it says, "I'm Coach. How can I help?" Has some immediate questions that you could ask it or write your own. But essentially this is just ChatGPT in your app. I honestly think every app is going to have this. I mean, I have this for my health apps and all this stuff for banking. I think it's just going to be a general natural language processing that happens in all apps. I need help with my account. Where should I put my tax refund? How's my net worth trending? Do I have credit cards that should be paid off? You know. Um, but yeah, this person shared that. I don't know if they're allowed to. A lot of people in the comments are saying that they received a similar update and it also had an NDA. Oh well, he's not going to jail. Um, I'm part of the beta. Definitely was not supposed to share. Okay. Okay. Let's see. Elon's new X money is going to destroy Robinhood. People have been saying this for years. It's still not even out. I don't know how they're going to pay a 6% interest. You know, everyone said that Robinhood's apps were going to kill, you know, the other credit card companies or the other banking apps, or SoFi will end up killing these businesses. And then what you realize is that there's a lot of room for a lot of them to exist. Okay. The Department of Transportation selected proposals for air taxi pilot programs, including one in New York. Archer and Joby are amongst the companies tapped for the project. Here's my opinion. If this project ends up going through, this is my assumption. Archer will not end up getting picked, and it will be Joby. This is my personal opinion. Okay? If there is a first and second in that industry, Joby is first and Archer is absolutely second. I don't put them in the same category. Ethereum Foundation ends up tapping Bitwise infrastructure for treasury staking, targeting 70,000 ETH staked total. Interesting for Bitwise. Different than BitMine, mind you. By the way, let's have a look at oil prices right now. It looks like the inverse of the market, honestly. Oil prices shoot up. Oil prices shoot up, market goes down. Oil price starts to go down. Now we're testing highs of the day. And at around 12:45, I bet you that's when that's probably similar to where the S&P ended up getting near highs today. Yeah, 12:45. That's hilarious. So where oil bottomed here, 12:45, looks very similar to 12:45, 12:46 right here when the market ended up peaking. That funny? We thought everyone had all this alpha, and then you realize it's just a simple game of dollars and cents. Okay, let's end up listening to Goldman Sachs, though, on this oil crisis. Oil crisis? Oil phenomenon? Oil Iran? I don't know.
On the surging oil prices and the outlook for energy in the event of a prolonged war with Iran. We're joined this morning at Post 9 by Goldman Sachs co-head of Global Commodities Research, Samantha Dart. It's great to have you back, Samantha. Good to see you. Were you surprised by last night's price action? How did that feel to you?
So we saw some escalation over the weekend, right? So we saw news that some Iran oil facilities were getting hit. We saw news today that Saudi is starting to curtail production. So this, number one, does not de-escalate the situation. And if you don't have de-escalation, the market starts to price in not just your regular gradual adjustment that requires a little bit of higher prices, but rather, hey, this massive shock might last longer than we think. So we need to move into demand destruction right now. I think this moving prices to above $100 a barrel signals exactly that. It's this worry that if this lasts longer, the market needs to have a little bit of a more aggressive correction in demand as well.
Is this East-West pipeline, can that be a salve of some point, even if it's only 5 of 20?
Right. So we expected that pipeline to flow a little bit more than what we can see in the data so far. We expected maybe something close to 3 million barrels a day of spare capacity, but the data so far is pointing to something closer to 1 million barrels a day. And the fact that Saudi is now announcing that they are shutting production down suggests that they are out of room to put the oil. And it matters because if they were able to just stockpile it and wait this thing out, then after the mess is over, they could send production out, so it would be a production delay rather than a production loss. I think the fact that they are announcing, yeah, we can't do much by the pipeline, and on top of that, we have to start shutting down, that sends a signal that, yeah, this is production loss.
Does President Trump have any options when it comes to fighting the higher oil prices?
So there is some SPR that could be used. Today, we saw the headline that the G7 are
petroleum reserve.
Exactly. We saw the headline that the G7 are considering maybe releasing some of that, right? And they talked about 300 to 400 million barrels of release being possible. This is not certain yet, but this would buy us time. If you had that type of volume releasing to the market, that's worth about 18 days of this disruption.
On other types of commodities that go through the strait, the fertilizers and the sulfuric acids and the things that feed into crops and industrial goods, is that as big a concern as oil itself?
It's a growing concern. For example, if we move to liquefied natural gas in the same way that you have 20% of oil volumes crossing the strait under normal times, you normally have 20% of global LNG supply crossing the strait. And natural gas is a huge component in the production of fertilizer. So even out in Asia, we're starting to get headlines of producers of fertilizer having to shut down because they cannot access natural gas. One option would be to use naphtha instead of natural gas. But if you don't have enough oil, or if naphtha is too expensive, you can't do that either. So yes, it is a growing concern that it's going to impact other markets as well.
So how do you make a forecast on oil prices right now without knowing what the end game is here?
We have to work with scenarios. And I think this is, in a way, it's what the market is doing as well, right? This rally that we saw from last week, to your point, like the price action right now has stepped up. What does that mean? It means this increased concern with demand destruction, which also means that if we have headlines that suggest maybe de-escalation, some of that risk premium might come off. So the uncertainty about the duration of the disruption is really key here.
You know what I've just realized? I'm aware, especially for a lot of commodity people and stuff like this. If you're not following oil on a day-to-day basis, sometimes you forget how important this juice is. I mean, like, it's crazy. The world runs on oil more than anything. Like, data's the new oil? No. Oil has just continued to be the oil. It always blows me away that, like, there's one area in the world where they're like, no more cargo ships. And they're like, the whole world's coming to an end because of this small path. It's still hard to wrap my head around sometimes. And then you go back and you look back on some of the environmentalists and everything like this that were talking about, okay, well, we need to, like, it'll be quite easy to get off of oil and we need to do this. And it's like, guys, not even remotely. Like, have you ever seen a barrel, like a 55-gallon drum? It's a lot. And then we're talking millions and millions of barrels here. It's just, sometimes it's hard for me to fathom. Yeah. Need more nuclear power? I think that's why, you know, a name like Bloom or something like this can also benefit. You know, you'll end up seeing some of these data centers and stuff that just realize that, one, I mean, they're going to be forced to find their own sources of energy, but also it wouldn't hurt to potentially diversify in the sources of energy that you end up having. Talk about job disruption? No. What I will talk about, however, is the potential, because I'm not a doomerist. I'm not a believer in maybe in energy and stuff, but I don't really have too many opinions on this. What I do have lots of opinions on is artificial intelligence and if there's going to be job disruption there. And there was one comment from, where was it? Did I not save it? I'm going to kick a hole in my desk. Where did I put this thing? Brian Armstrong, there it was. Brian Armstrong ended up talking. He's the CEO of Coinbase. He said this very popular comment over the weekend that said, very soon, there's going to be more AI agents than humans making transactions. They can't open a bank account, but they can open a crypto wallet. Think about it. No, but it does make me realize that essentially there's going to be a lot of AI spending for sure. And they won't even need to be able to tap into the main bank account of things. I know that people are always concerned about this, but you'll be able to, I think, highly control how much money that they'll be able to fund or have that they could end up spending. But still, there's going to be a lot of mistakes there, right? If you're talking about new potential jobs, I think one of them is going to just be like, here's some of the fastest growing jobs of the last 20 years. This is funny. Number one, manicurists and pedicurists, mani-pedis. Okay. It's the most first world problem that I've ever heard of is like, we figured everything else out. Like the water's clean, the food's good, might not be very healthy for you, but we're getting down to the nails to the fingernails and toenails of some of the fastest growing job titles because that's the luxury that we have in many first world countries. The second most large increase in jobs was compliance officers. That, yes, we can get the job done. Yes, we can get sales, but are you selling in the right way? And this will be even internal compliance. It won't even be just for agencies that are looking over businesses. Businesses will look over businesses because they don't want the agencies to then look them over. So internal compliance, very, very big. And I think that there's going to be a form of like internal compliance almost for corporate spending management for AI agents. And this is going to be a huge human-oriented job, is just making sure that all the transactions, AI and everything like this, is being monitored in proper ways to make sure that they're not inappropriately spending. But yeah. No eyebrows? I've got eyebrows, bro. I also have glass frames. And sometimes they hide the eyebrows. But I have eyebrows. They're just hide. I can't just be talking like this, do like this the whole time. That would be freakishly weird. Also, the mustache eyebrow combo, it's probably just best that I just tuck them away. My bad. I didn't mean to hit you guys with that stark look. I'm a compliance officer and the department is growing. Oh, yeah, of course. Of course. Whenever all these companies are making too much money, you don't know what to do with it anymore. Okay. I think he meant jobs as nail techs. I did. It's one of the fastest growing jobs. Okay. Are your eyebrows proportional to your mustache? Maybe. How you guys doing? All right. Let's go ahead and jump into. Well, first, let's see if CNBC has any other interesting videos that we want to see. I ended up watching this video this morning about peak American exceptionalism and that it's time to diversify and all this stuff. It's like exactly the opposite of the video that we ended up watching, the week prior, where that lady was talking. I think she was from Goldman Sachs. I can't remember. But she was talking about how, there's sort of this constant theme that comes up of the Russians are taking away from America. Sputnik's going to reach the moon first. The Japanese are a much better place. Their economy is much healthier and everything like this. Than the Chinese are. Their economy is unbelievable and their growth is so much faster and they're going to catch up and have a stronger military. And there's this constant theme of looking at different areas, finding different reasons why America is no longer exceptional. And I'm a Canadian, and I can't even get over the fact that people still think so doomerously about America. I can't. Anyway, so I don't even want to watch that video unless you do. But yeah. Let's see this. The global economy is due for more violent and frequent shocks. That sounds like the. Never mind. Let's just listen.
At the table. The Rowan Curran, a professor of practice at the University of Pennsylvania's Wharton School of Business, also chief economic advisor at Allianz. Good morning to you. We're all trying to make sense of what's going on in Iran, the price of oil, what it ultimately means to the economy, and what it ultimately means to the price of stocks. What do you think?
So start with what the market thinks. The market thinks that this will be a temporary and reversible shock, because after all, we threw everything at the US economy last year, and the economy proved incredibly resilient. So this will be the play once again.
Okay.
However, this time around, this is coming on top of a few things that are adding up. An uncertain labor market, affordability concerns. You have three distinct sources of financial fragility, and you have inflation that was already heading up, which limits policy flexibility. So I see the sort of central scenario that's an 80% probability in markets, about 50%. The bigger
Say
question,
again, you see an 80% scenario in markets at 50%.
no,
What does that mean?
that's the baseline right now in markets of a temporary and reversible
You think it's at
shock
80%?
is at 80%.
But you're saying you think it's actually at 50%.
Correct. And there's a bigger question that we see, which is we got to understand that this global economy is subject to more violent and more frequent shocks. And there's a really good reason for that. We've lost the unifying themes. So we just have to be ready for a lot of volatility this year.
And so when you think about this 80%, you think the market's at 80% in terms of this being resolved in 2 or 3 weeks from now in a good place.
Correct.
And your 50% basis is based upon what?
It's based simply that while the market nets things out, the economy compounds them. So if you put one shock after another, you lose financial resilience, you lose human resilience, and your ability to bounce back is less. And we have thrown a lot at this economy in the last 12 months. And right now, between the labor market, between the inflation dynamics, and between what's happening in the financial markets, there's reasons to be less.
Do you think there's any chance that things get worse, meaningfully worse in the Middle East? Meaning, China looks at this and says, oh my goodness, we can't have this anymore. And somehow they tried to intervene or get involved in some way that we haven't even thought about yet.
So you had Jared on earlier today, and I was listening carefully to him because I have a lot of respect for how he thinks about these issues. I think the point he made about asymmetrical wars have an unpredictable element to them that you have to take seriously. And that is why the left tail is so big here, because there is this element of unpredictability.
Okay, but let me throw in a different political, like a domestic political issue, which is this president has been very cognizant, to his credit, of what's going on in our economy here. And so there's part of me that wonders whether he could look at what's happening and say, you know what, I wanted to do this for 2 or 3 weeks or 4 weeks. There's still stuff I want to do on the ground. But you know what, I can't have it this way. And politically, it's going to be bad for me. It's going to be bad for Republicans. We're going to the midterms. I can't have oil prices at these numbers. And then he steps away. What do you think the chances are that that happens?
That's certainly possible. But he also needs to convince 2 other parties to step away, Israel and Iran. And they have different agendas at this point. So that's point number 1. Second, he's already aware of this because he said over the weekend, the higher oil price is a price that's worth paying. However, it compounds the affordability issues. So he's going to keep an eye on that. The one thing I would stress is we've got to stop thinking that oil supplies and supply chains are like an on-off switch. You can't turn it back on. If the UAE, Kuwait, and Qatar stop production, it will take weeks to resume production.
Although part of the reason they're stopping production is they're filled to the brim. They have nowhere else to store this.
They've reduced production. They haven't stopped it yet.
Right, but it would be, look, if you can get the ships moving again, you can start kind of quickly unloading some of that stuff that's been building up in the meantime.
If you can get the ships moving again, if you can get new ships coming in, that
Your point
takes time.
is, what's the time frame for when this is like, oh boy, this is.
It is weeks and months. It's not days. I mean, there's this assumption in the market, it is days.
Yeah.
And we seem to have forgotten the lesson of COVID, is when you impose a sudden stop on supply chains, things are in the wrong place when you want to start them again.
The end for COVID, when we had these problems, was that economies cratered. Do you expect that to be the case this time around? Are you expecting an economic downturn to the point of recession based on what we've seen happen?
No, I'm expecting that GDP growth will be about 0.5% lower than would have been otherwise.
Okay.
I'm expecting inflation will be 1% higher. And I'm expecting those central banks in Europe that have a single mandate are going to be hiking rates. And that's what the market also expects right now.
What do you think the US Federal Reserve is going to do as a result?
I think they will just stay unchanged and wait and see. No one wants to repeat the mistake of the 2021 transitory inflation call. No one wants to repeat that mistake.
A percentage point higher in inflation?
Than it would have been otherwise, yes.
That's over 3. That's like
Yeah, 3 to 3.5%.
3.5%. For how long? Transitory?
I don't like that word because that word encourages all sorts of bad behaviors. I think that if you look at the average for the year, we will be about 3% for the year.
Ooh. But how long does it last? Anyone's guess at this moment. People are looking through different scenarios, but we'll just have to wait and see. Who is being an active investor right now and trying to essentially adjust their portfolio to the news? Or are you just monitoring to make sure that like you don't have any plays right now, but maybe something does appear if something gets overly sold off? Or who's making moves now, or are you getting ready to make moves into the future? Let's do a poll on that. I would love to see that. I don't even know how to put this. Are you making portfolio changes based on oil today? Yes, now, or no, I'm waiting. I'm waiting and seeing. No, not ever. I don't know. Dude, I suck at making polls. I need to go to the gallows for the way that I wrote that frickin' poll. It makes no sense. I know what I want to say. This is why I don't write on Substack or something. I don't know why. I could just ask a question. And then you ask me to write it out, and I'm like, dude, it just doesn't come out the same. I sold 80% of everything in sitting in cash. You need some tutoring from Amit. Amit can write, but he needs some speaking advice from me. The dude says Massachusetts or whatever, and it drives me nuts. So I found a technique. You know, you have to find out what people's specialties are, and then you lean into those. Amit is an unbelievable investor in all of these things, but like, I'm not coming to him for movie advice or for speaking advice or something like this. The guy, like, we're about to be 30 years old, and this guy's out here saying High School Musical is his best movie. And then people still ask him, what did you think about, you know, Good Will Hunting? Who gives a crap what he thought about Good Will Hunting? The dude likes High School Musical. He's got his whole priorities wrong. Okay? And I love him. And he picks great stocks. But boy, oh boy, I don't know what. It's like it is a real red sign. Careful, ladies, you know. There's something's going on there. Okay. He needs to watch American Psycho. I don't even like that movie. Unfortunately, I know that. I know it's supposedly a good movie. Supposedly, I'm not a fan. Bitcoin's fixed supply comes into focus as the network just passed 20 million coins mined. We are officially 20 million into a 21 million total supply. So, how long until we get the remaining 1 million? According to this tweet that I found, 114 more years. The reason why it'll take so long is the halving events. Every 4 years that gets cut in half. Kind of hard to catch up and finish the mine if that's going to happen each time. Those glasses are a red flag, Tanner. Amit has glasses too. Okay, if I'm going to get an army of his, boyfriends in chat coming in to defend him when I'm not allowed to make fun of my own friends, what's the point of having friends if you can't make fun of them? And you're coming in to support him. Look at him in the mirror, okay? Let's see. If they have no ships, how can they block the oil? Yeah, I need to learn more about the situation. I'm definitely not monitoring it nearly as close. Okay. Also in crypto land, which I know is not the most highly sought after area right now, but supposedly Kazakhstan's central bank just announced that they will invest $350 million into cryptocurrency investments. When does the niche coins and niche investments not become so niche anymore? $350 million, not much, but that can change, and that can change quickly. Okay. Anthropic launched an AI exposure index to track white-collar jobs looking for the most vulnerable to LLM automation and whether the labor market is starting to show stress. Anthropic says jobs like computer programmers are the most exposed to disruption, with a 75% of tasks being completely automatable. I checked the list. I didn't see YouTuber anywhere there. YouTuber was off the list. Okay. Let's see. Ships are already passing through the strait. Well, my understanding is there is ships passing through, but it's almost a limited closure. It's not fully closed. So you keep your job. That's the hope. That's the hope. Because it's not a job. Yeah. You're a fully grown adult YouTuber? Why didn't you just put loser on your application? Yeah, no, that's you're right. You're right. I have to update my LinkedIn. Next time you check the LinkedIn, it's going to say loser. Unemployed. Yeah. Triple Qs, not knowing which direction that they want to go, potentially starting to head back up. Let's also check the SPY here. Down 0.5%. That's quite interesting. Let's keep up. HIM's now above 40% on the day, 22.18. The next best thing, Bloom Energy, at least from the names that I'm tracking right now, up 8.8%. But I have not checked names like Exxon Mobil and stuff like this. What are they up to? 0.3%. I actually do track Exxon Mobil. That's funny. Usually I don't track a lot of the more commodity names. 41% on HIMS. This, if you guys did not see, was a partnership with Novo Nordisk again. Old enemies becoming friends. Lebanon asked Trump administration to broker direct peace talks with Israel to end fighting. said Axios, citing 5 sources with knowledge. What a weird way to say that. Citing Axios. Or Axios, citing 5 sources with knowledge. He's one of my sources. He's got knowledge. He's a smart cookie, you see? OpenAI is buying PromptFoo, an AI security startup used by large enterprises, and plans to fold its tech into OpenAI Frontier to help companies test, red team, and monitor AI agents. I mean, yeah, we're gonna need it. That's insane. The AI agent thing is extremely weird to me. I'm in this weird space right now where I think a lot of these AI agents are obviously going to automate a large percentage of tasks that are not being or that are being done by humans, and that will have job displacement. And then after that, once we see the GDP sort of bump on that, the earnings growth on this, there could be a weird little ripple in terms of, like, okay, we saw the initial bump up of new tasks, but then we end up going back to sort of like a normalized level of growth until we end up seeing new models and new use cases for artificial intelligence. Chamath ended up talking about this on the All In podcast recently, of just like the amount of token spend from all the biggest companies in the world is not actually matching what they're seeing out of it right now. And that can't go on forever. There will be overspend. But then we need another breakthrough. We need another Claude, Cowork, something like this to make artificial intelligence that much more real. Little bit hard to do whenever you're being blacklisted from the Pentagon and other government agencies. However, Anthropic says, no. We're going to sue the government back for blacklisting over AI use restrictions. We'll see what happens there. Okay. Great company name. PromptFoo. It's a good name. Did you know that Google doesn't pay AI generated content, so you definitely keep your job? Well, it's not that they don't. Yes, they did block they banned like 12 million AI accounts and don't pay their bots, but that's not the only way to get paid on YouTube. If you can get someone like sending them slop information and then almost advertising with other companies, like there's a potential that AI content is still very much real. But yeah, there's a lot of huge accounts on YouTube that are not monetized that have massive businesses by taking people off of YouTube and bringing them to a Patreon, a merch store, whatever. So yeah, the AI slop is terrible. Tanner, the world is ending and you're just smiling. The world's been ending every single year, multiple times a year since I've been around. It's just like, eventually you're like, I'll believe it when I see it. Which can put you out of position. I think that the COVID pandemic, whenever it was first happening, I was like, really? I was like, I've seen a lot of deadly viruses, and then some of them, like, there's a deadly virus coming out of Africa or whatever. And they're like, oh, we have this flesh-eating virus that's coming over, and there's 4 people that just arrived in Toronto, and it's all and then it just sort of goes away. I don't know. So I remember initially whenever COVID was starting to come out, I was like, I'll believe it when I see it. And then it was like starting to really happen. And I was like, oh shit. And then I ended up buying a Carnival Cruise as my sort of comeback play. So it's not always the perfect strategy, but I definitely lean more into optimism than pessimism. That's for sure. Do you set stop losses? No. Yeah, the Ebola moments, all that stuff. No, not happening. Stop losses? No, I think it's just my lack of I don't think I'm actually buying risky investments. I think the market might have ups and downs, but the companies that I'm holding, I actually think are doing phenomenally. And if they're not, then I sell them, right? Then I absolutely have to get out. And that happens, like I pick names and then they don't perform the way I want them to. PayPal definitely didn't have the recovery that I wanted to. Still made money on it. Cash App wasn't the fintech that I wanted them to be, and there's a bunch of these. But you drop those and you hold on to the ones that continue to perform. The new banks, the Robinhoods, the SoFis, the stocks can be up and down, but the actual company's financials are doing great. And that whenever the market does get more optimistic again, they'll be in way stronger positions than they ever were. So I use these as buying opportunities, but not looking to trim names because the market has suggested that they, like there was that tweet that I shared from Ben Horowitz recently, and I just love it. I continue to think about this. The market's actually not that great at finding the truth. They're great at finding a consensus and or converging on a conclusion. That was the actual quote. Here it is. Markets aren't efficient at finding the truth. They're very efficient at converging on a conclusion, often the wrong conclusion. So I think stop losses would make those wrong conclusions real. I don't want that. I'm not trading. I'm buying great companies. Company performance versus stock performance as a basis for portfolio balance seems like a superior evaluation metric. Yeah, I mean that's worked for me. Obviously there are people who trade and they trade they're very, very good at it, but I've never been good at it. I feel like I need to monitor a absolute million things, and it's way more stressful. Honestly, I think some of those people hate themselves. If you're a day trader, I think there's some I think you like self-pain. You're a little submissive little puppy in the bedroom. Like you're a weirdo, you like getting stepped on. You like pain. If you're a long-term investor, you're a Chad, you're cool. You like being optimistic. You just enjoy watching companies grow and succeed and solve problems over time, and you're excited for where human potential is. You're betting on the future. That's Chad behavior. Yeah, call day traders cucks. Yeah. So I'm, trying to stay on the Chad side of things. Not always getting there, but anyways, let's go listen to one of those cucks now and see what they have to say about the turning of American exceptionalism. Let's have a listen.
Rashir Sharma, chairman of Rockefeller International, founder and CIO of Breakout Capital. Rashir, good to have you back. Thanks for the time.
Thanks, Carl.
I want to get to your piece on China, but just overall on this price movement and watching the G7 and watching Japan and wondering about the release of emergency stockpiles, where do you see this headed in the near term?
Well, I think that the market's reaction so far has been exactly in line with what we have seen historically. We had looked at this a while back, and the playbook typically is that in the first week after the outbreak of a geopolitical conflict for the 25 major episodes going back to 1950, we typically see a decline in the S&P of around 4%. Now, usually after a month, the S&P tends to recover that entire decline. But the probability here is a bit different, I think, because the reason why this threatens to be worse than the average is because even before we went into this conflict, I think we had other problems brewing for the market, which is principally what's happening in the credit markets. So therefore, I feel that this has been the catalyst for a major de-risking move. And even if we do get some cessation and hostilities in the Middle East, I think there's been a regime shift here for markets, and it's going to be quite hard for them to recover and make new highs anytime soon.
Do you think the movement in commodity prices will then lead to a tightening of conditions that leads you to credit events?
Yes, I think that's exactly what's going on, which is that, we had spoken about this late last year, Carl, which is that my own view was that the AI trade was, like entering a bubble phase, and that every single bubble in history ends when you end up getting a tightening in financial conditions. It doesn't have to be interest rates, but a general tightening in financial conditions. And I think that's what this commodity price rise is leading to. And this is why this is a bit different also from past episodes, because whenever you ended up getting some sort of a shock to the market, you thought you'd get an easing of financial conditions via the Fed. I think the Fed's out of play this time because they've missed their inflation target for 56 months in a row. Core inflation still stuck at close to 3%. So I don't see the Fed riding to the rescue anytime soon either. So that's what's complicating the market's narrative further here.
And Ruchir, in terms of the relative performance, U.S. versus the rest of the world, we've obviously seen that reverse to a fair degree. It felt like there was, coming into this year, this sense that there was early cycle tailwinds kicking in for the rest of the world, this global reflation trade. Is that been reset, or is that now been called off?
Well, I think it's been suspended, and it's been suspended for two reasons. That if you see what's happening in the markets around the world, there are two effects which are really going on. One is a simple degrossing effect, that whatever the winners were of the past few months have suffered outsized declines. This goes with market performances around the world, sector performance, and even some of the stock performance, right? It's been a simple calculus as that. The second effect has to do with the oil effect, which is that the countries which are much more exposed to importing oil have been hurt far more. And in that regard, the US is a relative winner simply because of the fact that the US is not that exposed anymore to oil developments around the world, given the energy self-dependence here. So I think that is what's causing that. So yeah, if the conflict lasts a lot longer, I think that's a problem. But then I also feel that people begin to ask questions about US leadership then, that if this really goes on for a long period of time, that what exactly was the US doing out here? And, like how do we trust the administration given what it said? So I think that this is a temporary sort of pause in the US outperformance, which we saw from the last 10 days or so, which is that I still.
Okay, I mean, he's bringing it down by the individual days. I think we're a little bit more longer term focused than that. I think the idea of oil coming down, this is why U.S. is losing its exceptionalism or something like, or oil coming up is the reason why we're losing or something like this, I think is way too short-term focused. Every country is going to be harmed by this type of thing. I think it slows down economic growth. We want global trade, right? Okay. Let's have a look at this really quickly. Oracle down 3%. There was some pretty crushing news that the Stargate project that OpenAI and Oracle were doing, which they have earnings tomorrow, so this is going to be a massive question of or topic of conversation. But that Oracle and OpenAI were essentially canceling expansion plans of that massive Texas data center deal. And then there was a question of who done it. I'm seeing a report right here saying OpenAI was actually the company that backed out of the deal because it wants separate facilities purpose-built around NVIDIA's upcoming Vera Rubin chips instead of scaling further with Oracle. So it's not that they're slowing down the GPU game. They're building. But they want purpose-driven data centers around the Vera Rubin chips. Every chip has different architecture, different heating and cooling, Well, I don't think many chips are heating, but that, you know, innately heating, and then you have to cool them. And so looks like they are deepening the relationship with NVIDIA and saying maybe that Oracle is not the one needed for that. Yeah, they want the new. Exactly. They want that good. Okay. I've always been a little bit concerned with Oracle, especially the amount of risk that they have been taking lately. Whew. It's a little too hot for me, but we'll find out how good they're doing literally tomorrow. Tomorrow after the bell, Oracle ends up showing off earnings. That'll be one to listen to if you guys are even like remotely involved in the AI trade. Let's have a listen to that call. It'll be very important. Meta just temporarily closed their Tel Aviv office. That makes sense. Okay, let's see what else. Oman's Sultan congratulates the new Iranian supreme leader. That also just came out. I also wanted to see this. So we've been talking a lot about generative AI and you know, what do we call it? You know, agentic AI as well, but we have not been talking about, or at least it's slowed down in conversation, the talk around physical AI. Let's have a listen to this. If it has music, I'll just mute it. But this is Figure. Okay, this is Brett Adcock's company. They have a beautiful robot, which I think is their version 3, or they're coming out with their version 3 here soon. They also have their own software, which is the Helix software. It's essentially taking in all of the information and running it through LLMs to make these decisions. But let's see this. Look at that. It's not great. It kind of looks like a tall toddler, but they didn't need to give him cheeks. But what's it called? It is pretty stunning that these things will essentially be able to run 24/7. You know? Am I watching my killer? I don't think that like we probably will see some sort of accident happen after these are commercialized and put into people's homes, and I think that will be a stark moment. But like I don't know. Automobiles have killed a lot of people as well, but would you say that they're a net positive to society? I would probably say that automobiles were a net positive. It'll be interesting to see how that develops. I mean, the walking is just phenomenal, though. Puts away the toys. Come on now. Dude, look at the it's protecting its lower back, the squat and everything. This is phenomenal. Head on out. Dude, I love it. I actually love it. Fixes the pillows, make sure the remote's all lined up, takes the cleaning supplies, heads out. So let's see where this was. This is where it was. Took 2 minutes to do that. And this is the worst it'll ever be, and it's not even out yet. That's pretty good. I like that. It has to squat, no spine mobility. Dude, I don't have any spine mobility either. Okay? I've got neck pains. I turn my head like Batman these days. I literally am like this because I don't know what. I honestly think it's the way I set up my desk. The monitors are too high. My chair's not high enough. I'm ruining myself. I'm going to be walking like this robot a generation ago. No, you don't think normal people will get these? I think that's the same sort of conversation of like back in the day of like normal people won't get cars or something like this, or no, I prefer a horse. It's like, I don't know. Why would no one, why do you think people would not get these? Of course they would. Same way that you would get a dishwasher or, you know, any other appliance or anything like this that's making your life easier. This is it essentially is an appliance. That's what it is. You know, it's moving around and just making your life a little easier. As long as you can find some sort of trade-off of like, essentially whenever I go to spend money, I think about it like this, and it's super simple. If I go to order out versus cook myself, can I make back that money in the time that it would take me or that I save from cooking? The answer is almost always yes. Okay, so I don't cook. But what's it called? That's going to be the exact same way. Like if there's a monthly subscription or something like this, I'm just going to say, hey, like how much time does it take me to clean my entire house? Okay, should I be doing that or should I be doing what I want to do? Okay. No, their robots are the real deal. They're the real deal. If you're poor, you're cooked. No, man. Like, I don't know. I think it's very similar to the way that we have things now. Like, are you cooked if you're poor whenever cars came out? Like, yeah, I mean, the initial cars that came out, you didn't get those, but eventually they're going to make ones that are absolutely cost effective. What if cleaning is my passion? Then you'll clean. Then you won't need the robot will be doing the stuff that you don't want to do, or you don't get one. But if cleaning's your passion, baby, clean. You know, if horse riding is your passion, you're still riding horses. It's not like the car ruined it for you. Like, yeah. Let's see. Come clean my house. Yeah. If you're a cleaning passion, start cleaning for free. Okay. Let's see what else there is. Microsoft ended up coming out with their own version of Claude Cowork. This is actually very funny. They came out with, as Satya put it, announcing Copilot Cowork, a new way to complete tasks and get work done in Microsoft 365. When you hand off a task to Cowork, it turns your request into a plan and executes it across your apps and files, grounded in your work data and operating within Microsoft 365 security and governance boundaries. Literally amazing. Okay. It looks like it's inside of like Microsoft Loop here or something. Maybe this is Copilot's own service. But yeah, it's doing
prep time with your team and send a status update to the broader account team. Cowork folds it into the plan without pausing what's already in motion. It checks schedules and sends a meeting proposal your way, which you can book right then and there. Then it crafts the email, which you can edit manually and hit send, bringing the power of Outlook right into the flow of work. Now let's see what it put together for us. It creates a briefing doc packed with an account snapshot and everything relevant for the room. and it keeps to your original template formatting. A presentation that lays out the opportunities and your competitive edge. And a sales and usage breakdown with graphs and charts to back it up. All saved directly to OneDrive so the content is immediately enterprise knowledge that's protected and ready for collaboration. While all of this is happening, Cowork is moving all your tasks forward at once, and because it runs inside Microsoft 365, security and compliance come built in. This is Copilot Cowork, built for real work.
Built for real work. And what I didn't know this is potentially built with Anthropic. Worked closely with Anthropic. We have integrated the technology behind Claude Cowork into Microsoft 365 Copilot. All right. So, Anthropic could be, making a ton of money here. Once again. Built for real work. It's built for NVIDIA work for sure. I literally still think like NVIDIA at today's price is like one of the greatest investments that you can make in the markets. Like I was thinking about it and I was looking at like some of the companies that I was like, okay, which like if I had to name 5 companies of the companies that I wanted to double down on, what are the ones that I would double down on? And like all I could think about was like NVIDIA again. Why is Cowork different than Copilot? Or is it an agent? Well, it's like the term agent is going to change so much because I think every service that you essentially find will become agentic in artificial intelligence. Essentially, what it means is that like it'll be able to run tasks on your behalf, not just answer questions. So the difference might be instead of you saying, "Hey, if I like, can you write me an email?" It will say, "Okay, I've written you an email. Do you want me to send it using this email on Outlook?" Something like that. That might be an agentic process to think about. Okay, do you want me to repeat this task every week? Do you want me to like? You can set up to help automate work going forward. If this then that type processes, right? You can automate a lot of work that humans were doing before. But then that's why people say like, oh, I'm going to have 50 to 100 agents. It's because like everyone's going to be controlling these things of, okay, well, as a bunch of different subset of if this, then that's are coming out, then they're going to like, I'm going to have one to clean up my entire inbox. I'm going to have one to make sure that whenever those orders come in, that all this information is sent to these specific suppliers to make sure that I have like all these little area specific agents that know a subset of tasks. Like when this happens, do this. If this happens, then do that. And sort of just make sure that they can control one subset of your organization. Okay. At this point, what does ChatGPT have that other LLMs don't? They have no moat. I think it's more about personal preference. They're all extremely different. I find that ChatGPT has by far the best memory of any other LLM. I don't know what it is. It just knows me. And I don't even use it that much. I honestly use Gemini more than ever. And I think that's more because the creative side is super there, and it fully understands YouTube. So just like for my personal questions that I ask it like about YouTube and all this stuff, it just has the answers that I think are much better than what ChatGPT or Grok or any of these have given me. If you're a coder, I don't think that you should be looking anywhere too much elsewhere than Claude being by far number one, or ChatGPT has some really good use cases for Codex as well. But honestly, I think that you need to try them all and then see which one is best for what. Like in terms of like live updates or understanding tweets or something like this, Grok is still useful. If you're like reading a tweet that like you just don't fully understand, you can just ask it in X, hey, what does this mean? How does this relate to X? You know, or essentially what I meant was like X, Y, Z type thing. But yeah. Do you own any Anthropic proxies? Yes and no. Like, can I call Amazon a proxy? Can I call NVIDIA a proxy? In that case, I do. But like, not like Zoom or something like this. Not like pure play names that have benefited greatly. Grok is very fast making images and pictures. Yeah, if you want terrible images and terrible pictures. I find Gemini to be the best. For generative AI, I think Gemini is the best right now. Nano Banana is... Mwah. Don't forget the Chinese AIs too. Yeah, I think like for use cases that people have, like running their own models and stuff, especially locally, some of these open source you know, small models like Quinn and stuff like this are quite interesting, but I don't personally use them. Yeah. But dude, my bills for artificial intelligence is so high now. I pay for Perplexity Computer, Base 44, Gemini, like Google One. So not, but I did it for Gemini. I've got Grok Premium, like the highest, the Ultra Grok or whatever. Like I spend a ton on AI. And I think a lot of those will come across multiple services. But I think people sort of thought that across Microsoft and Mac. It's like, oh, you know, once they do this, then Mac will have that. And then but you do find even across Microsoft and Apple that Apple's really good for certain things and Microsoft's really good for certain things. And they kind of have their own personalities and focus heavily on certain use cases. I think that the thought back in like the 1980s is like all computers eventually will be the same. And then, but it's not like they are for the most part. But then you get into like very specific taste. And then you end up finding you're either an iPhone guy or an Android guy. For small reasons. Like we're talking colors of bubbles here. Like, but it means a lot. Why do you need so many? It's not that I want so many. It's that they're changing so fast that like I want the best one at the time, at the day that it's the best. So then I pay for Gemini. And then Base 44 comes out and I want to try that. So then I buy that. And then Perplexity Computer comes out and you know, Gemini doesn't have any of the agentic services that I want that Perplexity Computer has. So I want to try that. So it's not that I'm paying for all of them right now. I would drop Grok in a heartbeat, like, but I paid for an annual subscription. I still have it. That's sort of how I've accumulated so many, is I'm just trying them all. What do you need Gemini for? Though Gemini is my daily driver. Honestly, that's the one I use the most. That's the one that I'm asking all my just basic questions. Hey, I need a receipt. Hey, I need a workout plan. Hey, I need, you know, whatever. You know, take a look at this. Help me with this. Yada, yada, yada. That's what Gemini is for. I use Gemini more than any of them. But then I might ask, like Perplexity Computer, hey, BMNR updates their holdings every week. Make a spreadsheet for me that updates all the metrics. Like go to their website, get all the metrics, update my spreadsheet automatically. Do that on a week by week basis. I have that set up. So, yeah. Which one do you find great for deep research purposes? Perplexity. I like Perplexity the most for deep thinking. but it's just using one of the models. And I think often it uses ChatGPT or it uses Gemini. Which ones do you guys use? Let's run a poll on that. I also want to check the poll on the last one, the oil question that we had. No, I am waiting, and no, not ever will I make. Only 14% of you guys said that you're making any changes to your portfolio right now for what's actually happening, which I think is extremely healthy. I think that's healthy. Obviously, you want some people who have the knowledge to make changes. Like, that's not even bad. That's not even bad. Okay, let's see this though. Which AI tools do you use? And here, I want to know from the people who do not use them. Be honest. If you do not use them, we'll do ChatGPT. We'll do Gemini. And then, we can only do 4. And I don't use it daily. If you don't use it daily, let me know. Be honest. But ChatGPT, Gemini, what should the third one be? Claude? Yeah, Claude. None is, if you don't use them daily, that's the none category. Okay. Let's check markets right here. QQQs coming back a little bit flat on the day. Gemini taking the cake, 41%. You know what's the coolest thing about Gemini and why I also want to use it so much? I think end game, Gemini will be the best. I think because for me, I'm so integrated with Gmail, YouTube, some other services that I don't even know if I should say or shouldn't say, but I'll just say them. Like my home security, my everything like that. That's all like all Nest products, everything like this. I just think eventually Gemini is only going to get more and more integrated with that information. And that's going to do very well. And then as it starts to get more and more of these agentic processes, which I think Gemini is falling behind on because it hasn't pushed out this sort of co-work-like product just yet, but they will. They will. They have their I/O event coming up this month. Is it this month? When's Google I/O? Maybe I'm thinking it's May. Google I/O. Maybe it's May. Did I mess that up? I'm on their website. It's not loading. It's just giving me a black screen here. But let's check the Mag 7. Google, one of the actual green names of the day, up 1%, 301. But yeah, I think that Google is going to do very well. I liked Google Bard more than Gemini. That's funny. Gemini at 45%. I don't use daily at 21%. But almost in the subcategory of the people who said I don't use it daily, I also would like to know, like, do you find yourself Googling things daily? Like, do you have constant questions, or do you just find that you're like not on your phone asking it too much constantly? Because for me, I'm always like, there's sometimes whenever I think of a question and I'm like, oh, I don't know the answer to that. And then I'm like, why do I even allow myself to not know an answer for something whenever I know that the answer's in my pocket? So I might as well ask rather than sitting here in uncertainty. And then in those times, I Google daily, stuff like this. I think that's the same thing as using Gemini. Like, The Google thing, essentially, most times whenever you ask it a specific question, it will at the top just sort of tell you the question. Like, it's not sending you a link. It just says, you know, what's the population of the United States? Instead of it like bringing you to a website, it'll just say the population of whatever is this. That is Gemini. Like, if we go ahead and share this really quick. AI overview, Gemini. So even if you are Googling, I think that's fine. But if you Google ChatGPT, Claude comes up first. ChatGPT. Didn't for me, my friend. That was a ChatGPT all day type answer, and then OpenAI was next, and then OpenAI, then Wikipedia, OpenAI, then ChatGPT, Google Play, and then r/ChatGPT. All right. Okay. I asked via Safari. That makes sense. Carlos, how's it going? NASDAQ just broke green. Let's go have a look. NASDAQ just broke green. Let's go take a look at some oil prices. The NASDAQ 100 composite just broke green. And let me switch this oil price to daily. If I keep it on the 1 year chart, it looks insane. Freaks me out. Oh, wow. At 210. Where was 210 on this chart? 210. Actually, I didn't really see much of a price change at all here. Not nearly what I was expecting. Amazon down 1.6, Meta down 1.4, Tesla down 1.5%, but starting to recover. Wow. Microsoft as well. Let's see if there's news stories coming in. Microsoft is launching a new E7 bundle at $99 per month, adding Copilot and AI management tools into the Office stack. And a little note here was added. Microsoft has 450 million business users in January, but only about 3% were paying for Copilot. Wow. $99 per user per month sounds like a lot. It sounds like a crap ton. I guess it also depends how much tokens it comes with. I think like just the seat cost means nothing if you don't know the amount of tokens that you're going to get. Like, because that's what I found with like Notion AI agents. I don't know if you guys saw like they pushed that out, but it comes with absolutely no tokens. So like you're gonna have to continuously pay to even use the thing. So one, you have to pay, but then there's like a gas fee that comes with it. So you got to be careful. Whereas, Perplexity Computer, I ended up buying the, $200 a month subscription or whatever, but it comes with a crap ton of tokens. So like you can actually use it potentially for the full month. And well, you might still have to buy tokens, but it depends how much you use it. Do you own Grab? No Grab for me. All right, ladies and gentlemen, thank you all so much for watching, but that's it for me today. The markets, I have a little bit of madness today, but honestly, I think at the end of everything, we will be fine, but we're gonna monitor the situation for sure. I'll see you guys all later. Expect a video coming out today. Once I end up hiring on this new person, I'm going to try to shoot for a video every day, a live stream every day, a member only live stream every day, and then look to get on like special events and stuff as well, like my conversations with Steve or CEO interviews or something like that. That would be separate from the sort of 555 a day. But until then, look for the occasional video. Bye for now.